You take a small $50 hit on your first trade of the morning. Instead of brushing it off, you double your position size to make it back quickly. You lose again. You double it one more time. Within 90 minutes, a completely manageable $50 loss has spiraled into a catastrophic $3,000 hole. This is the revenge trading spiral. It happens when a bad loss triggers an intense emotional need to recover your money immediately, pushing all logic out the window. To set an effective boundary, we first need to establish your absolute capital baseline before the trading session even begins. Step 1. Always use your current equity. If a $50,000 account draws down to $47,200, that is your new baseline. Step 2. Extract a fixed percentage to find your risk per trade. Use 1% or 0.5 for beginners. That risk percentage must translate to a dollar amount that does not cause your heart rate to spike. If losing that exact amount triggers anxiety, your size is too big. Step 3 introduces the 3-strike rule. This is the maximum number of consecutive full losses you will allow yourself to take in a single session. Multiplying your per-trade risk by 3 strikes gives you a mathematical ceiling. When you hit 3 straight losers, the rule dictates your day is over, providing a structural stop when the urge to force a recovery is highest. Establishing this rigid per-trade math ensures that a normal streak of bad luck remains a mere statistical variance rather than a catastrophic failure. Pure math is only half the equation. Your daily limit also has to account for your specific trading strategy and your personal emotional triggers. Step 4 ensures your total calculated limit stays within a highly conservative percentage of your total capital. Many prop firms set this at 4 to 5%. Setting a personal limit at 3% provides a buffer to protect your account. Step 5 adjusts that limit based on your strategy's volatility. A high-frequency scalper might need slightly wider bounds to accommodate the sheer volume of trades, while a trader waiting for 1 or 2 high-probability setups needs tighter bounds. Finally, Step 6 is your personal stop rule. These are behavioral triggers that require an immediate halt to your session, regardless of whether you've hit your financial limit. Keep a physical checklist like this on your desk. If you widen your stop loss mid-trade, execute a setup out of boredom, or feel desperate, you trigger an emergency stop. The screens go off immediately. Financial limits protect your account from the chaos of the market, while psychological limits protect your account from your own self-destructive tendencies. Let's pull all 6 of these steps together into a concrete, rapid-fire mathematical blueprint. Step by step, here's the formula for a $5,000 account. You take a 0.5% risk, which is $25. Apply the 3-strike limit. That gives you a firm $75 max daily loss. But knowing your limit is $75 is useless if you ignore it in the heat of a live drawdown. That is where TradeZella's progress tracker comes in. It acts as an automated compliance desk, monitoring your session rules in real time and grading your execution. When reviewing your calendar, you will see a clear distinction. A day tagged DLL hit means you reached your limit and stopped. The system worked. A day tagged with a red DLL exceeded badge means you traded through your limit, revealing a severe lapse in discipline. If you do break your rules, you can use TradeZella's Trade Replay feature to watch the session unfold tick by tick, pinpointing the exact moment your discipline broke down. External software tracking adds a layer of accountability to your mathematical rules, making it significantly harder to ignore your limits during a drawdown. The ultimate requirement for long-term survival actually happens before the opening bell rings. Your daily loss limit must be calculated, defined, and locked in stone before you load a single chart. Never modify your limits mid-session. Treat your daily loss rule exactly like this steel vault door: heavy, unyielding, and completely shut. To build this structure around your own trading, use TradeZella to track your discipline and enforce your rules. You can find a 20% off link in the description below. In this industry, survival always comes first, and profits come second. A strictly enforced daily loss limit is the single most effective tool to guarantee you stay in the game long enough to succeed.